close one, Jason. I wish people knew behind the scenes how close we are every week to not getting this going live. You had a moment
to
there.
absolute disaster. To absolute disaster.
You had a real moment there where I saw in your face, it looked like you were seeking inner peace while simultaneously getting ready to pick up your laptop and throw it against the wall.
Yeah, I was ready to go pure Office Space on it. Like, for those that don't know, I'm a pure Luddite, and nothing makes me angrier than when technology doesn't work. That's one of those things I just cannot handle. The small things in life. The big things I'm fine with. It's the small things.
It's the small things. Well, everyone, we've done it once again. Somehow gotten through an intro without totally scuffing it up. Welcome to the Pirates of Finance. We are your hosts. The handsome man across the virtual desk from me is the one and only, the young Hemingway, Jason Buck. I am his lowly co-host, the man who just tries to keep paddling upstream with this show, Corey Hoffstein. Listen, nothing we say or do or communicate in any form, whether through hand signal, smoke signal, this language, some other language, is financial advice. It's not advice of any form. Who are we to give advice, Jason? That's a question we should all step back and ask ourselves. Who are we to give advice? But if you are looking for advice, hey, get it from a professional. Get it from a financial advisor, tax planner. Just don't get it here because you're not going to get it here. With that,
hold on, I got to interrupt you. Yeah,
is that legal? Is that an official legal disclaimer?
Definitely legal disclaimer. And you made me think of something else with the advice part. I'm going to get that's perfect. Is I want to take a different tangent. I'm going to give advice. I'm going to give book buying advice tomorrow. Jared Dillion's book, Those Bastards, comes out. Subtitle: 69 Essays on Life, Creativity, and Meaning. If you've never read Jared Dillion's work, he's a great writer. I really enjoy it. If you've never read Street Freak, it's awesome. Can't wait for Those Bastards to come out. But speaking of advice, you got to love. Tierney Duff wrote him a little blog that says, the best advice you never asked for. That's just awesome. The best advice you never asked for. That's what somebody wrote about his latest book, Those Bastards. And yeah, 69 Essays on Life, Creativity, and Meaning. Run out and buy Jared's book tomorrow. If Jared was here, he'd tell you buy 10 copies. He's trying to juice that algorithm the same way we're always trying to juice that algorithm.
Pump those numbers.
That's right.
Congrats to Jared getting a book out. It's no small deal. I like how you say run out and buy it as if like you don't just mean open up a browser tab in Amazon.
Yeah, well, what I found is
I don't even know where a bookstore is at this point.
It's a good. I've seen Barnes and Noble still here in like the Philadelphia area. That gives you an idea of this area at all. You have never written a book, correct?
I have not written a book.
That's surprising.
Well, is it though? Is it? A book's a lot of work.
You produced enough content for books.
I did get a book contract at one point, and then I kept this company who has engaged with a number of other sort of my peers to write books. Said we would love for you to write a book. We'll give you a contract. Now the thing is, there's no upfront money, so it's like it's not like I got paid and didn't deliver. And then it became like, okay, what's your book idea? And every book idea they had, they were like, yeah, that sounds like a horrible book idea. So eventually just got to the point where I started writing a book that they thought was an okay idea, and I didn't really have any interest in. So I got through a chapter and was like, I'm not going to write this book. I have no interest in writing this book. You know, everyone I've spoken to has said, if you're going to write a book, it has to be like something you really want to birth into the world. And that's just, I have no interest.
Well, and I would say you're done now, because what does Meb say? He wrote 5 books, all of which were before he had kids, and not a single one since he's had kids.
Yes.
But also, like, I mean, mazel tov to Jared, because like, just like you said, the amount of work that goes into that. It's like when I go to like film festivals and stuff, they want you to rate the film like 1 to 5. I'm like, no, I'm going to give them all of them 5, because somebody spent like 2 to 10 years of their life on this. And who am I to judge like the amount of effort? Like, just mazel tov to anybody that wants to put that effort in. It's really
incredible. Yeah. Congratulations to Jared. I'm going to totally change the subject here. I like that intro. Shout out to Jared, but we're gonna dive into some real heavy stuff out of the gate.
All right, let's do it.
I don't know if you saw, but an Ether Rock was recently purchased for 129 Ethereum, which at the time of purchase was equal to $230,000. Jason, on a scale of 1 to back, how back are we in this bull market?
Well, based on that, you're tweeting about it. We're 100% back. Corey's now back in his crypto tweets. Yeah, I just noticed your Twitter feed now is a lot of crypto heavy again. A lot of NFT.
You know, I was saying to someone, there was a period during the DeFi boom and the crypto boom that there was so much activity in my group chats when I was asleep that I'm a little upset that it's not all going on now, because I'm up all hours of the night feeding this baby. It would be really convenient for me for all these like random NFT drops to start happening in the middle of the night when I'm actually up this time. That would be convenient. Look, you know, who knows? I know a ton of people think this is money laundering. I don't think these high price NFTs are money laundering. I know people think that. I don't think it is. So you had this big purchase of this, again, this NFT picture of a rock. We're going to leave it there. But it did make me think about not virtual rocks, but it made me think about physical rocks, because gold has actually had, I just insulted every
Look at you. Look at you. I just like the turn there too.
Yeah. It made me think about physical rocks, and gold's up like 8.5%, 9% on the year from the lows in November. It's up 20%. It's peaking towards all-time highs. I want to get your thoughts on gold. Do you think it's something that should be a strategic allocation in a portfolio? Is it a tactical allocation? Is it actually an inflation hedge? Give me your hottest, spiciest takes.
So many things on there. One, just to give context too, what do you say year to date? It's about 8.5. Is that right?
I think I was using the GLD ETF.
I'm looking at the future. I'm looking at the futures. I think it's up 8.5. And speaking of, we're back. Bitcoin year to date, it's up like 68%, and Ethereum like 50% on at least the future side. So I've said it before, like, I don't understand what gold is. I've been trying to think about this for like, I don't know, 2 decades. I'm not so certain. Historically, like we've talked about before, it is a hedge, right? But not in the years that you want it to be a hedge, or the quarters or months that you need it to be a hedge. And as you've talked about liquidity cascades, like a March 2020, everybody throws out the baby with the bathwater. Everybody's just trying to raise cash. So they're even selling their gold positions there. You know, historically, people have talked about, you know, the suit of armor versus a bespoke suit today, but it doesn't necessarily cover you in those intervening years. Is it a form of inflation hedge? Sure. Is there higher betas to inflation with commodities? Possibly. I'm not so certain, but I still think it needs to be part of our portfolio. Trying to think of what I could say publicly. We have it in our cockroach portfolio because we view it as like a fiat hedge of like, what if, you know, markets shut down like they did after 9/11, right? Like you want some gold. Not only do we use gold futures, we use physical gold as well. And man, it is comforting to have that physical gold when SVB was going on. I'll just put it that way. But then the question is like, what are you going to do with those kilo bars of gold? Right? Are you going to shave them off? No, like we've talked about before. It's like you're just, you know, you're hoarding supplies for, you know, the latest, you know, Blackwater ban that's moving through your neighborhood. So I'm not sure, like, if it seems to be a long-term inflation hedge. It seems to be a long-term purchase power parity hedge, but it doesn't seem to be those things when you want it most, which makes people rip their hair out and say it's stupid or it's never going to work, or, you know, the hate on gold is like right up there with crypto.
I find gold to be fascinating. There's sort of 2 things I'll bring up here. The first is, from a historical context, I wonder how much of our continued belief in gold is just long-term cultural memory, right? Gold, when you think about the way currency was created thousands of years ago, gold was sort of the perfect metal to work with, right? It's scarce enough that people can't just go easily dig it up. It's malleable that it can be made into currency, but not so malleable like silver that it's too soft and breaks easily. It doesn't have a ton of industrial uses, so it could be primarily put towards being a currency. And then look, if you're a government that sort of de facto institutes gold coins as a tax, gold becomes money, right? In my view, the thing that is money is the thing that your government taxes you in. That's ultimately what you have to earn to make sure that you pay your taxes. And so there you go. We get money, and gold sort of fits perfectly in this triangle of things we need. That's why it's not palladium. That's why it's not silver or other precious metals. That's why it's not steel. That has since changed over time, but our cultural memory goes back thousands of years. It's not a super stable store of value, but if you're not a U.S. citizen and or you go to a different point in time in history, and you're talking about being able to physically transfer some sort of value. Like, does it really matter if gold goes up or down 20% as long as you can get some of your net worth out of a country if you're fleeing or avoiding local hyperinflation? Like, as long as it's accepted worldwide, I could see it having value. It reminds me of a story a friend of mine told me who was in the special forces, and he said one of the things he was taught was that when you go out in service, having a Rolex watch is sort of the equivalent of being able to get a low-end car anywhere in the world. Like, if you need to escape, that Rolex watch on your wrist will get you a vehicle. And I sort of think of gold the same way. Like, there's no cash flow. There's no reason it should necessarily go up. I can't make a strong argument why it's tied to real rates other than people think it should be, right? But it seems to at least have some modest store of value for folks in the short run, especially if you consider a considerable amount of local volatility. If the US dollar suddenly exhibited hyperinflation, gold might be a tremendous store of value. I don't know.
Well, I love how carefully you're choosing your words, which is great. By the way, in the comments, Sean said, "Gold is money; everything else is credit." You know, that the Austrian perspective, but at the same time, like I was watching this thing at Steve Keen the other day too. Is talking about like all we are is like exchanging bank liabilities. I thought that was another good way to put it. But the whole point of gold, what we're always talking about is like it's nobody else's liability. And thankfully, well, it passed so quickly. I don't think it actually worked. But the idea with with SVB and some regional bank collapses is we found out that deposits are banks' liabilities. And that's what this is why people are gold bugs. So they like gold is they don't like it being anybody else's liability. Granted, you have other issues with, storage facilities, vaults, like how are you going to keep it? Security is now your liability, not necessarily it being on a balance sheet of a
But
bank.
it presumes there's a buyer, right? The whole thing
Yeah,
with gold
yeah.
is it presumes there's an eventual buyer on the other side. I know gold people and Bitcoin people don't always get along, but I think that's fundamentally what people argue with Bitcoin, which is, look, we've got this whole proof of work network that is doing all this work, and so long as we within the network all accept the Bitcoin from each other, then for our services and goods, then the Bitcoin has value. We've circumvented the global monetary system. Now, the question is, how big can you grow that network? You need everyone to accept it. I think most people on Earth will accept gold as a form of payment for service and goods to a certain degree. And so in that sense, it is a sort of global money of sort of the last resort, right? I don't know if you could really go anywhere on Earth and not convince someone to take at least gold as payment in some form.
Right, but it's currency. But would you call it cultural memory? Is that what you called it?
Yeah.
But also, like, I mean, I'm sure this is going to permeate the rest of our conversation, but value is in the eye of the beholder, right? And we do have a long cultural memory. So it does have those thousands of years of Lindy effects. And to your point, like, historically across the globe, it's used as, as a medium of exchange, but like, that's that cultural memory. And it's everything that we do that has value has cultural memory to it, right? Even our modern laws are a cultural memory from, the beginnings of Christianity. So like, we could kind of say that about anything. Like it's all cultural memory and a sustained global belief or disbelief in that this thing has value. And that's the point, is like, it's interesting though that the dislocative effects when gold has high value is it cannot be cataclysmically dislocative, right? Otherwise we're talking like guns and butter time, right? It needs to be like mildly dislocative, like any sort of like diaspora or like intermittent market shutdowns. But if things get worse than that, I'm not sure gold has that value. Besides, you want protein and a water source,
right? I often hear the argument gold is an inflation hedge. I think those who, first of all, we've been on this tirade before. What is inflation? What type of inflation? I'm not going down that path again. I think there are plenty of people who bought gold. Massive truck just went by. Plenty of people who bought gold in 2020 expecting inflation that then did not get the hedge they wanted. But there was this paper that came out a couple of years ago. I think it was August 2020 is when it came out. That was written by Claude Erb, Cam Harvey, and Tadas Visconta, called Gold, the Golden Constant, COVID, Massive Passives, and Deja Vu. Very long title. The idea of massive passives came about in the post-commodity boom era, when Goldman wrapped up commodities in an index. Suddenly tons of endowments started investing in commodities. That flow of capital changed the very nature of commodity returns themselves, became more correlated with equities. There's volatility spillover effects. Commodities within that basket became more correlated to each other than commodities that weren't included. And so this idea of like massive passives, when you get too much flow into a large passive index, can change the nature of what you're actually trading. What this paper argued is that the same thing has happened with gold, that by taking gold and putting it in financial products like ETFs, like futures, it is now no longer tied to real interest rates the way it seemingly was in the past. They showed a ton of the returns are basically driven by supply and demand in the large ETF structure. That is, money flows into the ETFs and money flows out of the ETFs. That is now the primary driver of returns for gold in the short term. It's just all supply and demand flow. And again, without any cash flow coming from gold, other than like there's the storage costs of gold, that's sort of your negative carry. I'm not sure why it would necessarily be attached to economic fundamentals anyway. And I'm sure I don't think any gold bugs actually listen to this show, but I'm sure if they did, they'd tell me again why I'm a complete idiot and way outside my realm of expertise. But gold is one that I've always struggled with my whole career.
Yeah, me too. But we still hold some. Still always holds up, because like the whole point is like I don't even know what has value. So I just try to have a diversification of things that are potentially valuable. And it's like, pick, what do you want? I got everything. I'm selling, all these different things in the marketplace. What do you want? What has value? I got it.
You were the one who bought the Ether Rock, right? That must have been you. Yeah. You have got your digital gold and your physical gold.
No, but I thought was interesting what you brought out out of the paper, that Cam Harvey et al. Paper, is that, with financialization and fractionalization, and, does that affect pricing over time and historical representations? As we brought up, do you think it's analogous to like what I say is like housing is no longer a home? We financialize that product, so you might as well throw out 100 years of housing data because it no longer applies.
Yeah, I think that's spot on. I mean, the more something gets financialized and traded, the more you add liquidity to the system. I think it fundamentally changes the nature of the asset class. That to me was something that has been a larger area of study for me in the last couple of years of my career, and an eye-opening part of my career, where it used to be there are these fundamental factors, and not to say they weren't changing, but they were sort of constant North Stars for me. And then it came to the point that I was like, flow into these concepts fundamentally changes the concepts themselves. And I think that's somewhat obvious in hindsight. I just thought that there couldn't be enough flow into some of these ideas that it would ultimately change it. But, even look at something like equities. I think there's a strong argument that the indexation of equities, and I don't even want to go down the road of is passive messing up the market. I just mean being able to buy equities at a super low cost in a super safe vehicle that's highly liquid. Everyone's doing it in their 401k as a savings vehicle. Why would that not structurally increase the PE of the market versus what we saw back in the 50s and 40s? Right? Why would you, if it's easier to access, there's more people accessing it, more demand, not necessarily more supply. Like, why wouldn't we have a structurally higher PE? And I think just thinking through different markets like that is something I've tried to focus on a lot more in the last couple of years.
Yeah, and it's not even, you don't like without, like you're saying, let's pause on the ETF passive thesis, but like you're pointing out is like not only structurally but legally, the way they've changed the frameworks where you're forced into indexing, right, on your 401ks and everything, that's obviously going to change the markets. It's a locked in effect, as maybe like Jaron Lanier would say about, any sort of technology or AI, is like we kind of lock into these effects. So you're just forcing it through these tubes into changing that PE multiple. So I think that's a fairly salient argument. And in what you're saying about flows, to me, like that's the way I just see the world, right? Like if we just use like a 4-quadrant model, right, of the axes of growth and inflation, whether it's stocks, bonds, gold, commodities, vol, whatever it is like everything is performance chasing, and it's just flows moving between those asset classes around the world. And so that whole like equity risk premium or volatility risk premium, to me, those are always rising and falling because it's just flows that are just performance chasing around the world, and we're just playing hopscotch. It's a form of like gentrification on Manhattan, right? You go gentrify one neighborhood, becomes expensive. You go to the next neighborhood, gentrify, and eventually you end up back in that first neighborhood 20 years later. Like the same thing to me happens with just asset classes. As large money just passively flows around the world into different asset classes, depending on the regulatory environment or the financialized or fractionalized environment, that's what, moves prices. So like you're saying, if you're structurally forcing more money into the stock markets and the stock indices, yeah, I think there's argument to be had for higher multiples. What do you think Schiller would say to that?
I don't know. Schiller like completely changed his mind a couple of years back about all this stuff. So I don't know. I I don't listen to Schiller much. I think the cape is overblown as a concept. He I think adjusted his cape and said it was like this massive innovation when it was really just correcting some very obvious stuff a few years ago. I don't know. He's definitely in the behavioral camp. He might say that increased access to markets should structurally shift earnings yield. I think it's a tough one. I don't want to pretend I know what would show.
I love the behavioral camp. It's like dark matter or emergent properties. It's a fancy way of saying I don't know. It's like, is everything behavior or nothing behavior? It's like a catch-all for saying, like, trying to be smart about saying I don't know.
Yeah, our buddy Mike Philbrick would say, well, it's all behavior, but you don't actually have any control over your behavior anyway. So.
Exactly.
All right, I want to change topics here. I want to continue with the hot takes though. Last week we talked all about OpenAI, GPT-4, all these potentially cool uses of artificial intelligence. There has been a recent call among a large cohort of industry folks for a pause on research in artificial intelligence. Popular signers of that letter include Elon Musk, as well as Ja Rule. I don't know why Ja Rule signed it, but I guess Ja Rule signed it. Well-known artificial intelligence researcher. I'm curious as to your thoughts here. Are we getting out over our ski tips with something that's a dangerous game? Should we be hitting pause to really think through what we're doing with the future of AI? Is this an area we should wait for regulation to catch up, or should we just let capitalism run willy-nilly?
This is so good, and you're definitely setting me up, as you know, and it's perfect timing. Homie Dave is in the comments. He said free will ? I just joined at the right time, and so Dave knows exactly what road I'm headed down. This was fascinating to me. It's like, I'm thinking where I want to start with this. One, as you and I always talk about Gell-Mann amnesia and Dunning-Kruger effects. Like, just because Elon can land a rocket doesn't mean Elon knows everything in the world at all times and is like always right about everything. Like, everybody has to put that caveat on that. Humans be humans, and guess what? Elon's still human. It doesn't mean he knows everything. This is amazing fear mongering to me from many aspects. One, let's just for a second, let's just define that like AGI is possible. Generalized, what do you want to call it? Strong or general, artificial intelligence. Let's just say it's actually possible. Well, if it is actually possible, what in the world makes you think you can hit the pause button and then legislators can put rules around it? Like, you're done. It's already over. What are you even talking about? Secondly, let's go back on that for a second. I don't think AGI is possible. As you know, I try not to have like really strong beliefs or any of that stuff, but like you need to reverse the question around on yourself, right? Are you conscious? Do you have free will? What is consciousness? Are you not just an emergent property of subconscious effects? Like, what would generalized AI look like? And more importantly, the idea that ChatGPT, these LLMs, these large language models, that leads to generalized AI is erroneous to me. Like, if generalized AI is going to come, it's going to come out of like silicon petri dishes or whatever we're creating in labs. It's not necessarily, it's like Pasteur said, omne vivum ex vivo, all life from life. Like, it's not going to come out of these large language models. They are amazing tools. And what it is interesting to me is, even though it confuses people into thinking it's sentient or solving problems, it says more about people to me than it tells me about, LLMs, ChatGPT, or if just AGI is even possible.
Yeah, look, again, I will disclose this and say I am by no means an expert in this area, but my interpretation is largely that these LMMs are just probabilistic models,
Yeah.
right? And what the real growth has been here has been the ability to ingest not just text, but audio, visual, all sorts of data that allows it to really expand its field of so-called knowledge. For those listening, I'm using air quotes, right? Because it doesn't know anything. I like the question of what is consciousness anyway? Not something I want to get into philosophically here, but why is it our view of consciousness is what would define sort of generalized artificial intelligence? On this topic, by the way, you gave a shout out to the homie Dave. Dave wrote a great article. All of Dave's
Yes.
articles that he writes over at Vetify are worth just putting down whatever you're doing and going and reading. But he wrote a great article recently, and he and I chat about this stuff from time to time. One of the things that came up in this area over the last couple of weeks was talking about Midjourney, right? Being able to generate these artificial images. And there was a really cool series on Reddit where someone said, "What would selfies look like in all these different time periods?" So you had conquistadors, and you had people in World War I, and it was all these people taking selfies. And someone took a step back and said, well, they all have one thing in common here, which is it's all the American smile. Like these people wouldn't have smiled, right? Like this is an American cultural phenomenon. Now, part of me says, well, the selfie in many ways was probably an American cultural phenomenon. I can sort of see, like, if you say selfie plus these people, you're going to end up merging those two concepts. But this author showed a picture recently of some Ukrainian soldiers in Zelensky taking a selfie, and there were no smiles, right? The smile is very different in Eastern European and Russian culture than it is in American culture. And so the argument was this Midjourney ability to generate these images is great, but look at the cultural bias that's built in from the data it's ingested. It's clearly ingested massively American cultural data. That's what saturated the world. And so we're going to see that seep through in an unintended bias. If all the data you're training on is an unintended bias, it's going to seep through in these models over time. I thought it was a really interesting point, something all of us should keep our eye on, right? I don't think these models are being necessarily trained with a bias. I know there's some people who think, oh, there's a political agenda at play. I don't think they're being trained with a bias, but it's going to ingest whatever bias is in the data.
Yeah, it's like IQ tests. They embedded an American like cultural bias, right? That's why IQ scores are going up allegedly, in conceptual problem solving. God, I didn't even know that one. That was really interesting. But I want to have like two tangents kind of here too on this AGI thing, or even on the pause side. Is the whole like Musk and Kurzweil kind of drive me nuts? It's a form of millenarianism. And that's idea is like comes from religions that we're talking about, these cultural biases of some form of rapture or transformation at a cultural level. So these people in Silicon Valley that bandy about that they're atheists or agnostic, they're just repeating the same old patterns of religion, from the Abrahamic traditions. They're expecting some sort of cataclysmic change in a lifetime. And to me, that's like the height of solipsism. To think that like you're going to be at the time when we're going to convert to a singularity, or that AGI is going to happen, is like the probability of that happening in your lifetime is probably non-existent, but yet you always want that to happen. It's like the Chinese proverb, maybe you live in interesting times. And so like I just don't get it. It's just a different form of religion. And if that's what you need to give your life meaning, like go for it. But at the same time, I got a interesting question for you. Like, do you think you're conscious? Like, what does that mean?
I would always respond back with, it doesn't matter, who cares? As far as I'm concerned, I'm conscious, and if I'm not, it doesn't change anything about what's happening in my life, right? It's sort of like the free will debate, which I've had many times. Whether I have free will or not doesn't really matter, because it's not going to change my life.
Yeah, it's like, to me, it's like but you're saying these latent cultural relics, like whether it's gold or religion, part of it is the idea that you're conscious, right? Like we don't know, we could just be all these subconscious processes that then we just have this delayed narrator telling us that we have consciousness and free will. And to your point, does it make any difference?
I just want to be clear. Did you just call religion a cultural relic? Because while we're pissing off gold bugs, we might as well piss off every person who's religious. Like,
I thought I got that in with the millionaireism too.
Yeah, you took a full page out of Pomp's book from our discussion last week. Is like all engagement is good engagement. Just piss everyone off.
Well, generally that's my MO, right? Like that's my programming, right?
Yeah.
Just to
all
be
right, so here's
a
a
dick to
question for
everybody.
you.
Yep.
If you could invest in OpenAI right now, they're doing a $30 billion round. You can invest.
Oof.
Would you invest?
No. And here's why. Two things. One, did you hear that? What's homeboy from OpenAI? What can I think of his name off the top of my head?
Altman.
Oh, Sam Altman.
Sam
Did you hear that? Like he doesn't even own shares on the for-profit side. I need to fact check that, but that's insane. Like he did they started as a nonprofit and then they needed to raise capital. But he said like, I'm good. I have plenty of money and I don't want this clouding my judgment. If that's true,
have you
that's
seen
crazy.
the whole waterfall of how profit sharing works with OpenAI?
No.
With Microsoft?
No.
It's pretty crazy. So I actually have a waterfall graph. I wish I could pull it up. There's a Forbes article, I think, that talks about the waterfall graph with Microsoft's investment in them. So if you actually buy shares today, so the only way to buy shares, they just finished around. They do have, I think, employee shares. There's a tender offer out that you can get employee shares that are a 25-75 revenue split, is my understanding. So like 75% of the revenue up to a certain point of reinvestment goes to Microsoft, because Microsoft has not just made cash investment in the company, but everything's running on their Azure servers.
Right.
And so they're basically saying, we poured billions and billions and billions of dollars into this. We want to recoup all that investment in our hardware. And so revenue coming from OpenAI, I think 75% of it goes back to Microsoft to repay for that reinvestment before it then waterfalls into it's this. And so trying to figure out actually what would these shares be worth under different scenarios of revenue is actually non-trivial. Not to say I want to go and do a discount cash flow analysis, but like there's these weird step functions to it.
Well, you could just have ChatGPT do your DCF model for you. But here's why I said no. To like, actually, you're kind of making the point. One is like, what, in 2 months, it went to 100 million users, like the fastest growth of all time. So the hype cycle, right? Yeah. Like the hype cycle right now at 30 billion, like you're saying, is like the hype cycle is probably at peak hype right now. But then, like you're just saying, the relationship with Microsoft is why I said no. Is like you have all these other closed API processes, whether it's with Google, Apple, Amazon. So until if they can't tap into API access to those, like you're missing out on all that knowledge base for them to predict with their LLM. So unless you can open that up. So if Google's been, far drastically behind on this, but if they figure out a way to catch up, with Google and YouTube, like I would rather bet on that.
I agree on the hype cycle to a certain degree, but I don't think OpenAI has done open rounds yet. I'd have to go look at, and again, I'm speaking from a place of lack of knowledge. This is just a random question, but I don't think
that's what we do here.
I don't think I'd have to go to like their Crunchbase profile or whatever it is that tells you how many rounds they've done. But I think Microsoft was like really the first big priced round. I know they've raised a whole bunch of money, like 100 million or whatever. But I don't think they've done like a huge VC round where their valuation has gotten pumped to the moon, right? You look at 30 billion and you say, if this really is a transformative company, right? Does it become $1 trillion company? What's the multiple return there? That said, I believe the share structure caps the return. Again, like the share structure they have is totally weird at OpenAI. I think there's an actual cap to the return you can earn on the employee shares that are being floated around right now. So kind of wild stuff.
Can you imagine if it's the first $1 trillion market cap company and Sam Altman doesn't own any shares?
That'd be pretty crazy.
That'd be like you made a decision.
Wait, first trillion. Didn't Amazon who hit $1 trillion? 100 billion? I think Amazon hit $1 trillion. I can't. Numbers make no sense to me anymore.
Exactly.
I'm pretty sure that's already happened. Like there were a couple of them. Apple, Amazon. Oh
yeah, you're right. Sorry. Or yeah, should I say? Yeah. No point. Like or private company, maybe it'd be the first $1 trillion private company. Then they probably go public. Would go public anyway.
Yeah, I don't even know how the public listing would work there.
Right.
With these crazy shares, like again, what's your exit plan? What's the liquidity? I don't know. Listen, I might consider investing if I could, just so that when the AI becomes sentient and takes over the world, it'll say, well, you invested in my development. Like, I won't kill you, puny human. I won't put you in the penal colony.
This is the other two dumb things I want to
Don't
address.
call
is the
me
idea,
dumb.
No, is like the idea of sentience too. Like if they become human-like, and like you just said, how are we determine sentience and consciousness? But like just say AGI was human-like, and I'm using air quotes, is then it's instilled in it with fallibility, death denial, all the things we are as humans. So now we just got a bunch of pseudo humans running around, and so the idea that they're going to turn this into like the paperclip model is probably non-existent either. So as soon as they become human-like, they're just as fallible as we are, and they don't necessarily have certain evil teleological
but I think
preferences.
I think the whole idea with AI is that it would rapidly train itself out of those things. That's the fear, right? That's the Skynet fear, is that the processing compute power picks up so quickly. Okay, let's change subjects here.
No. Before we get done, I also want the stupidity of also the pause AI community is also the one that everybody's going to lose all their jobs, and that and we're all going to be destitute without jobs. As we both know, that has been historically for hundreds of years a fallacy coming out of the Industrial Revolution. It just doesn't happen. We end up working more and having more jobs, more creativity. This is just an amazing tool.
So I want to talk about going public.
Sorry. Yeah.
I want to talk because we talked about OpenAI going public. I shot you over a thread on Twitter that I found late last evening. I think I found it at like 3 a.m. as I was bottle feeding my child, bleary-eyed. Porter Stansberry, who is the founder of Stansberry Research, had this thread that was absolutely scorching. He is the largest individual shareholder of MarketWise, which I believe is the owner of Stansberry Research. Stansberry Research is, I believe, a 15 to 30-year-old newsletter company, does a gazillion dollars of revenue. I don't want to say it's the most profitable financial newsletter company, but they make mega bucks.
I think they said before, if I recall the thread correctly, before they went public, they were doing $500 million a year at like a 30% margin.
I think that's about right. Something, it's several hundred million.
Yeah, that's insane.
I mean, I almost want to read the thread, but it's like 20 tweets long.
Right.
But the highlights here are that somehow, despite the fact he is the largest individual shareholder, he was not the CEO. They have a two-person board. This two-person board and the CEO took this company public and have basically lit it on fire. Now, he's not involved at all anymore, but he's like sitting here massively critiquing, talking about how they're lying to investors, right? He's effectively like, what's crazy is he's lighting his own net worth on fire, or at least it seems like that, until he points out, he says somewhere down in the thread that it's structured in a way that he can't even sell his shares for some reason. So he's just basically like, this is a case of like almost financial fraud. They're making it seem like the company's okay, and they're doing everything wrong. The product sucks. I'm not involved. They're making it seem like we're involved. They're losing money left and right. I have never seen a large shareholder take to social media to torch the company that they built. Like
it was quite an amazing like poison pill, like mutual suicide. But and then that was unclear to me, is why can't he sell his shares? Was it just like the 6-month lockup for IPO, or are we past that? Like, what was the?
Yeah, let me see. So by the way, so he says, what do you think happens when an extremely profitable company, when it gets stolen in a fraudulent IPO and then gets run by a group of folks who don't know anything about financial publishing? A disaster. I ran the company for 20 years. On average, we grew 30% a year, sales and profits. That's insane, by the way. There was never a single month in the red while I was in charge, and our operating margins were always above 30%. Last year, the current management saw our file size decline by 13.5%. Our net sales fell by 34%, leaving us with a $200 million in sales business, down from $500 million. With cash flow from operations at $40 million a year, down 70% from when we went public. Normally in this kind of business, when sales are weak, marketing spending, which is the largest variable cost, is heavily reduced. We called this liquidating the file and used these periods to build cash to be deployed later when conditions improved. During these periods, cash margins would usually exceed 40%, but that's not happening now. Despite big file size declines and big cuts, negative 40 million to marketing spending last year, fourth quarter cash margin sits at just 9.4%. I always manage the business at more than 25%. I can't imagine how frustrating it is to have built a business for 20 years. Somehow, I would love to know the story of how this kind of got stolen out from under him.
Yeah.
And have people managing it in such a wildly different fashion.
It's so fascinating on so many levels. Like when I was reading, I was saying the same thing. It's like, I can't wait for the movie version of this, right? Like, is this like an Italian job or is this my like American made? Like who's going to star in this to like see how like the all the layers to this. But at the same time, it's like, obviously Porter over 20 years built a business that was doing $500 million a year in revenue at like a high margin. So like obviously knows how to operate a company. And I hope over that time he put a lot in his own pockets, which I'm sure he did, which is why almost in the Sam Altman sense, he's like, I got enough money, so I'll poison pill this and torch it. But how then so I at those two pieces, and then I look at but then how did you end up in Clown Town going to IPO? Because it's not like this is a first time out, like he built a massive business. He's obviously sophisticated. How the fuck did this end up in Clown Town where he got like just swindled by like, it seems like based on his thread, almost like amateur hour, like mafioso style, like where he just got like absolutely screwed left, right, and center by people that had no business, running an IPO.
Yeah, he says,
that didn't make sense to me. He said there's more to come, right, or something.
He says their former genius CEO, who they paid 15 million shares, signed up for an IPO that makes it impossible because of tax and SEC regulations for him to sell. I don't know what tax and SEC regulations he's talking about that would make it impossible for him to sell, but he says the board defrauded him and is now destroying the firm he spent 25 years building. He says that they are, I want to use these words because they're his words. They continue to completely mislead investors. I mean, that is not a small claim, right?
No.
Like this is the type of stuff you get sued over for saying. He says on the earnings call today, the current CEO insisted that the company's decision to retire a group of outstanding warrants was a wise use of capital. Complete bullshit. That decision cost us, the shareholders, 6 million shares of stock, worth roughly 18 million plus 2 million in cash legal costs, or a total of $20 million. For what? Warrants that would have expired worthless. Why? Because doing so put millions into the pockets of the two board members. Here's a question. Do you think that this is a play for him to torch the company publicly, drive the share price down, and get a group of activist investors involved?
I mean, that's what I was texting you about.
A brilliant business.
That was my immediate text to you. It's like, buy it back for pennies on the dollar.
Right? And I know your brain immediately went to, can we buy this? Because that's the way you think. You're like, well, why don't we just buy it?
They're going to run it into the ground.
We'll package it with every newsletter we send. We'll send a bottle of rum.
There we go. And except for
our subscribers to the newsletter, all they have to pay, Jason, it won't be money, but it'll be a promise. Tell us about the promise.
It's called the Pirates Pinky Promise.
This show
is not for free. We're out here putting everything we got on the line. Corey's reading Twitter. He's barely slept. This guy's up all night taking care of a baby, but he's preparing for this show just for you pirates, for the booty crew. So part of the Pirates Pinky Promise, this is all we ask in return, is for you to like, subscribe, hit that notification bell. If you're listening on audio, come on over to YouTube. Check out the live. Check out the comment section with the booty crew. Even if you can't catch it live on YouTube, come watch it on YouTube. Corey's handsome as shit. You're missing out. That's the Pirates Pinky Promise. We're not asking for much. It's just an agreement amongst pirates. It's the Pirate Pinky Promise. It's how we help grow this show. And that way we can bring you more great content where hopefully Corey can get maybe a few more hours of sleep. And this is how he's going to build his empire so he can take over Stansberry Research.
By the way, speaking of comments, big shout out to Ryan Taylor, who left maybe the best comment on our YouTube video I've ever seen, which was very terse, but I think really summarized this show very well. It said, interesting, but not useful. Thank you, Ryan, for that. Just complete, what's the word I want to use? I mean, just complete wind in our sails, you're the wind beneath our wings. When those sort of comments keep us going, we appreciate them. We want more of them.
So to me, like that might as well be both of our middle names, right?
Yes.
Interesting, but not useful.
So it's funny. Interesting but not useful is great. I really like that phrase. The one I use in my household a lot is prepared but never ready, and ready but never prepared. So I am ready but never prepared. Like you need me to go out the door, I'm out the door like that. Will I have any of my stuff with me? Absolutely not. My wife, on the other hand, is prepared but never ready.
Ready, nice.
She will never get out the door, but when she does, like, she could live outside in the streets for months on end with all the stuff she'll bring with her. So those are my phrases.
So I want to bring us back to the top of the show. We talked about Jared Dillion's new book, but Jared's been writing around in his daily Dirt Nap newsletter about CRE, commercial real estate. So we've been talking a little bit about CRE, but I have like two different sides to it that I'm curious your take on. He thinks that we're at peak rates, and we're also at peak fear in CRE. So he's like, when like Axios and all these other platforms are doing all of these scare pieces about the collapse of commercial real estate, he thinks that sentiment-wise, we're at peak commercial real estate fear, and that if and when rates come back down, this will all subside. Okay. Flip side of that, Jim Chanos, believe, was on Business Breakdowns, and Jim pointed out that historically it takes at least 5 years for commercial real estate to recover. And Chanos was saying that we just had a treasury or credit problem at banks, but we haven't seen the asset problems show up at the regional banks that mainly are the ones that are providing the financing for commercial real estate. So that's two sides of the same coin. Where do you come down, Corey Hofstein? Choose wisely.
I mean, that implies, I mean, who am I to go against either of them? They're both very smart people. It does sort of imply that there's going to be an asset problem at the regional banks. I'm not sure why there has to be an asset problem with the commercial real estate space. I get that they are the lenders, but I don't know. I mean, people have been trying to call peak rates here forever. I think there's a lot of people I know who think that no matter what happens, we're going back to a ZERP world eventually. It's just sort of programmed in at this point that our only escape is low to potentially negative rates. It's just a matter of the Fed finally capitulating at some point. But I think it's also a question of there's so many aspects of inflation that are ultimately out of our control. We saw multiple waves of inflation in the 70s due to unrelated effects, right? Like there was a lot that happened that was geopolitical in succession that wasn't necessarily a direct knock on. Maybe someone can tell me a history in which it was all the things that happened were not sort of coincidental, but actually direct knock-ons from one another. But I think my broader point is, like, I'm not going to discount a potential path into the future where inflation, or at least inflation volatility, remains elevated, in which case, I don't know. Maybe Jared has a really strong view as to why it's peak rates. Certainly the market is pricing peak rates very soon. But I will also say the market has completely changed what it was pricing from the beginning of March to the end of March in terms of where they saw rate policy going. So it's hard. It's really hard to say here.
Yeah, I think he's more saying like peak fear in CRE. That's just his sentiment analysis. Man, you got me so excited for a second there. You said 70s inflation was due to, and I was just waiting for it. And then you managed to say like nothing but a word salad after that. It was beautiful. Like you never gave the actual reason, which, as you know, like we debate that all the time. People are still debating where 70s inflation came from. So
yeah,
we don't even know.
Which is my point, right? Which is like part of my point here. All we do know is that there were three consecutive waves, if you measure it via CPI, that got larger and larger till the final peak, right? It wasn't like inflation was just high. It was like inflation was high and then it dipped back down, and then it got bigger and dipped back down. I think a lot of people forget that part of history, and we could just be on a small dip before some other geopolitical event or just a lack of understanding of how the economic machinery works spirals us into another higher level of inflation. Or not. Or we could have this inflation thing completely under control, and the Fed's going to end up cutting rates because of some sort of economic pressure going forward. Or who knows? Maybe we're just going to get 4.5%, 5% rates in perpetuity with 2% inflation, and I can finally retire.
Was that wave after wave slowly slipped it? What was that song? Wave. So a couple of things I want to point out to you that this shows where my head's at versus where your head's at. A couple of things. Did you see, whether they're true or not? To me, this is probably like finding out people's net worth online. The NLI deals for some of the amateur athletes.
No.
The name, image, likeness. Oh, this is so good. I'm so glad you haven't seen this. Bronny James, LeBron's son, high schooler.
Yep.
Guess what his NIL deal is for? I think these are for 2022.
Well, first of all, expand on what that is. Where does this get used?
What do you mean? Where's it get used? Like he basically you raise, obviously you do advertising and budgeting for your name and likeness, image and likeness, right? So just like a professional athlete, you can do sponsorship deals. And you're saying, where does it get used as far as, what do you mean? Like,
yeah. So when you're saying how much is like, I've never even looked at this stuff before.
His income from selling his name, image, and likeness as a high school basketball player. What do you think Bronny James' income was?
Yeah, a shitload. I mean, just in the family name alone, and he's in. From what I understand, I don't play basketball. I'm not a basketball. I'm not a studier of the sport. I understand he's very good. I'm sure people are lining up to do deals with him over the long run. So
$7.2 million.
Yeah, I was going to guess somewhere between 5 and 10 million.
And then so they had the list. He was number 1 on the list. But then it was a lot of high school kids. Like number 2 on the list was.
All right, but how much? Here's a question. Yeah. How much of that do you think is people going, can we get in with the son to get in with the father? Like no insult, right? But how, like, there's an interesting game there of, we're going to pay this money. We don't have a deal with LeBron, but if we have a deal with the son, it at least gets an intro to the family that we might be able to do something with LeBron.
Right. Isn't that how George Bush Jr. made all his money too, right? Or
I don't know. You tell me.
No, like the same thing. Like people pay to get in, but even if they are, who cares? Like, but then, what is the young Manning cousin, whatever, Arch Manning, whatever? He was number 2 at like 3.5 million. There's a I should probably look up her name. There's an LSU cheerleader. She made like 3.5 million and has 20 million Instagram followers.
Oh, that's fascinating.
I think she was the only girl in the top 10. And then there's other like college football and basketball players rounding out the top 10. But it was like the top 10 was like a minimum like $3 million.
I would be very curious as to what she is. I don't know the cheerleading world at all. I didn't.
I'm sorry, not cheerleading. Gymnast. Did I say gymnast or cheerleader?
Yeah, you said cheerleading. Okay, gymnast.
Gymnast. But still, it's obviously like it's her Instagram that she brought coming in. So whatever she did on Instagram to get 20 million followers, and then it just so happens happens to be a Division I gymnast at LSU.
That's pretty brilliant.
So it's obviously probably more like
20 million followers is very impressive.
Dude, it's insane. Are you kidding?
Yeah,
very impressive.
What? And to be a D1 gymnast?
Yeah.
Holy shit.
Well, as you know, my sister was
the kids these days, man. They're talented.
You know, I can't believe, like, my sister was a D1 gymnast, and she's got a lot of broken parts nowadays. And yeah, there's definitely no NIL deals back in the day for that. Right. So it was a thankless sport, because if you didn't make the Olympic team, there's no professional gymnasts out there. So
and all that stuff. I mean, all that stuff used to be illegal, right? You couldn't, as a especially in college, couldn't make any money from your likeness.
Correct.
And that's all. And this is something I don't follow at all. So
right, which is, I don't know if I told you, one of the things I've always wanted to do is, like, there was when these NIL deals first came out, I want to say it was like BYU maybe, where a guy that owned like a protein bar company in Utah decided to sponsor like the football team and give like the non-scholarship players scholarships, right? And then whenever you went into their locker room, they had their protein bars everywhere. And I was like, that is genius. So what I translated it to, which made me laugh, is like University of Miami and SMU always got fined in the past, right, by the NCAA for paying players. So it's like, how great would it be now to like pay all those athletes an astronomical amount of money to make like University of Miami, the U, like dominate again. And now in the era of NIL, to like flip it back around, like you took away their championships, you took away all these things because they were paying players. Now you could pay players a fortune, just get all the best players in the country that are coming out of South Florida anyway, and make the U great again.
Changes the game. Now my question becomes, when does this get financialized? When do I get to invest in these players' careers?
Well, they had that. Was it minor league baseball where you can do that, right?
Yeah.
There's a guy that started a
That's
fund.
sort of I said that. Now I think about it, it feels a little slavery-ish. There's
No.
some ethical and moral dilemmas here.
Well, you beg an interesting question, Corey.
No, I don't. I raise an interesting one.
So the way you probably don't know this. The way soccer works is you have a player card, and the team owns your player card. So the way it works in like Europe and South America is, they'll buy a player's player card at like 13 years old, and then they'll invest, hundreds of thousands to see if they can get this player up to the professional ranks, to the full-on men's team, like the full Premiership team. And so they put this money into the player. They try to make the player better. Eventually, they'll sell the player. But what they do is they sell the player card. The salary is a separate negotiation. So it's kind of to your point that it does seem a little bit sketch, but this is the way soccer has always worked. And then some argue, well, they put much more money into these amateur and youth players, and they really try to develop them because they are a financial asset for them. So I don't know. It's a little bit of both sides, right?
I had a discussion with a prominent. I'm. This is gonna feel like I'm name dropping. I had a discussion with a prominent Silicon Valley VC back in the early 2010s, who was discussing the idea of a human capital market for developing nations. And it sounds really crude to say, like, I want to buy shares in this person, but the idea being like you buy shares in the person and then you are entitled to some of their wages. But his argument was, and he didn't think it could actually be done. This was sort of a philosophical discussion, but his argument was, if you could invest in people in developing nations, you would be incentivized for those people to get the best education, right? To get healthcare, to like be supported financially and in their lives, to make sure that they would then garner a higher wage for you to profit from. So he was saying, like, this idea of actually, and it's way too close to slavery to feel comfortable, but he was arguing the ability to actually invest in people explicitly could potentially increase our incentives to support other people. It's a very ugly capitalistic way of viewing things potentially, but I think it's an interesting philosophical debate at the very least.
Well, I'll try to get us out of this, but it is an interesting philosophical debate. If you think about like sub-Saharan Africa not having a lot of the natural resources we want, besides like coltan or maybe some rare earths, that maybe the real natural resource there is human capital. So that would be the way to do it. But we need to definitely get out of this conversation as quickly as possible.
So canceled very quickly.
I'm gonna let you choose. We have only a few minutes left. Choose your own adventure: either board jerky or end of quarter.
I don't know what the first one you said is, so I want to do it.
All right. Well, then,
board jerky.
Yeah, this is great. I'm so glad you don't know this. So, the genius of Nelk Full Send is, Happy Dad is their seltzer that they're putting in gas stations, convenience stores across the country, right?
Yep.
So most people would go, okay, we've got Texas on lockdown with our distributors, and we went through this whole 3-tier system with our rum and how much of a nightmare it is. So they go, okay, we've got the state of Texas, we got our distributors, we're pushing out our hard seltzer, Happy Dad there. Everybody go, okay, great. What other alcohol, beer, wine brand can we push through there? They go, no, we already got this distribution in convenience stores. Let's look around this convenience store and gas station. What other sorts of things could we brand here that are not branded properly? And they go, perfect, check out POS system, beef jerky. There's no like high-end brand of beef jerky or no real brand of beef jerky. So they took the Bored Apes they owned and made Bored Ape jerky. It's called Bored Jerky. And they just used the distribution they already had in place. Because as we usually talk about, distribution is the only thing that matters.
So you say the distribution they already have in, that's really interesting. So the distribution they already have in place, which I would presume that the distribution of alcohol is actually very different than the distribution of something like jerky, right? Listen, as someone who used to unload trucks in the summer at a convenience store, the booze truck was very different than the food truck, right?
Yeah.
Like they're different trucks. They're different distributors that end up coming through. So other than having like the brand awareness at the point of sale that those people might be interested, it doesn't seem like a natural, like I get the lateral move to another item in the store, but it doesn't seem like a natural fit to me of like you have the distribution engine up and running. Like you're going to have to find someone to shelf that product for you.
Right, but you have the relationship with the stores for the shelf space, which is key. And then it's probably smart for them to build a tangential brand that's not alcohol related for as far as marketing branding purposes.
Right. Yeah,
That
I
then
could
they're
totally
symbiotic.
see, right? I could totally see Sunoco goes, oh, your booze is selling really well in our gas station. Yeah, well, people seem to like this brand. We'll take whatever else you're doing.
Yeah. And or vice versa. We can market the shit out of the beef jerky because it's not alcohol. And when people buy the beef jerky, they're also picking up their Happy Dads.
Right. I like it.
Board
I like
jerky.
those lateral moves. Now, how come they
Thought you'd
went
like them.
board jerky and Happy Dads? Like they're not using the Bored Ape component with the.
So Happy Dad actually came out. I saw this the other day. Speaking of which, when they were working on their mood boards, they were watching Happy Gilmore, and they were thinking we need a brand that's like fun, golf, drinking, and they just kept rewatching Happy Gilmore, and it was like, what in Happy Gilmore, like Happy, and they're like, we want Happy Dads, like and all this stuff, like it. So it just came out of actually Happy Gilmore was the impetus for Happy Dad, and then they wanted to create more like a nostalgic beer-like brand to both the can and the branding.
I feel like all the best origin stories are like that. I was like, we were just
Yeah, it was
sitting
like
around.
something
That was the movie
nonsensical.
that was on. Yeah, I
Ex-
didn't think it would
exactly.
stick, and then it actually ended up being a national brand. Great. Okay, well, I think that's it, Jason. I think we made it to the top of the hour. I do want to say, anyone sticking around who's still watching live, you should jump over to Resolve Riffs, our friends over there.
Yep.
They are having Brian Moriarty from Morningstar and Dave Nadig from Vetify on to talk about the recent Credit Suisse and the bond debacle at large. It's going to be a fascinating discussion, so highly recommend. If you're listening to this later, go look that up. Shout out to those guys. I think it's going to be a great episode. But most of all, thank you to everyone who's tuning in, whether you're tuning in live or tuning in after. We appreciate your time. Once again, this is not financial advice. It's not life advice. It's not philosophical advice or religion advice. For those of you who we pissed off, please leave a comment. Pump the algo for us. We appreciate it. Hit that like, hit the subscribe, hit the notification bell so you know when we're going live, and we'll see you next week.